Welcome back to the Isn't That Rich podcast. I'm your host, Jill Franks, and my co-host, Ashley McVicker, and I today are sitting down with Crystal Wright from our operations center, and we're talking all about escrow. It's something we haven't really covered yet in our podcast, and the reason we kind of picked this topic is I think it was the week of Christmas. We all got an email. The entire team got an email from Jill Gooch, who's our compliance officer. And it was saying that the escrow analysis statements went out to all of our customers who escrow and that we would be getting phone calls about it. And so I figured, I have no idea what escrow is. I'm sure a lot of customers might not know how that process works. And so Jill Gooch pointed me in Crystal's direction. So welcome on, Crystal. Thank you for being here.
Thank you for asking me.
Yeah.
So Crystal, tell us how you started your job and your career at Farmers State Bank. Easy question first.
Yes. I was in banking for about 10 years, worked at one of our competitors. Then I left and became administrative assistant at a church and worked there for about 10 years. And the first time I was in banking, I got to know Amber Hermits, and she had kind of recruited me to come to Farmers State Bank. So I decided that it was time to make a change, and that's how I ended up here. I always heard good things about Farmers State Bank, so I was very happy and am very happy to be a part of the team.
Well, we love having you on the team. Well, I'm glad you're the expert here today to share with us a little bit because we know nothing. So talk to us as though we're infants in this topic.
It does look because I just got a mortgage last year and I remember getting the giant stack of paperwork and talked all about escrow on there. I'm like, I feel like escrow is this word they use like on Hollywood films, like, oh, do it in escrow or whatever. And you've never known what it was until then you work at a bank and then you become an adult and you figure it out. But yeah, I guess you can just go ahead and tell us, first of all, what exactly escrow is.
Escrow is when you decide to take your taxes and insurance and add that to your monthly payment, and when you come in to make your mortgage payment monthly, there's a certain portion of that will go into your escrow account, and then we manage those funds and pay out your taxes and insurance when they come due. That's what escrow is. Customer doesn't have to worry about that. Then you don't have to, when taxes come due, and it's a large amount most of the time, we all know taxes are a big portion of being a homeowner. And insurance now is, of course, going up. So sometimes that is a big expense. So that way you're paying monthly and you don't have to worry about coming up with that large amount at once.
And all those other bills that you have to pay, it's just all in one when you pay your mortgage. Is that correct?
Yes, it is. That also, another thing that customers might not realize is that your escrow payment, when you decide to escrow, it is added to your principal and interest payment. And when you make that, you have to be able to pay both of those together, or else you have not satisfied your payment.
Okay.
So it will not roll your due date. It can make you be delinquent if you're unable to make that portion of your payment.
That makes sense because the bank is paying that on your behalf. And so if there's not funds there to pay it, then you're delinquent on both accounts.
Yes.
Got it.
And I don't think sometimes customers understand that, especially when they get their analysis and the escrow portion goes up. They might call and say, well, I can only pay, half of this. That's all I'm going to be able to do. And kind of feel bad for the customers then because that makes them delinquent.
Yeah.
There are instances that the escrow portion has went up considerably. And if they will just come in and if the customer would just come in and talk with their loan officer, we try to work with them and help them because we do certainly not want our customers to be delinquent and have those issues.
Yeah. So not everybody has an escrow account, correct? So if you have a loan at the bank, do you have to escrow or can you pay your taxes insurance on your own? Is it required? What does that look like?
Most of the time it is voluntary. There are certain circumstances, certain loan products that require escrow. And if you have flood insurance, most of the time escrow is required to pay the flood insurance.
I didn't know that.
I didn't either.
And other than that, it's voluntary. So if the customer starts out and that's what they want to do, they might have it for 2 or 3 years and then decide that they want to take that upon themselves. They come in, talk to their loan officer. We have them sign a form that they wish to cancel their escrow. And then any funds left in their account, we disperse back to the customer.
I see.
I think I know the answer to this, but I'm just going to ask for people. Do escrow accounts, I don't want to say have interest. I guess you could say have
aren't interest
accrue
bearing.
interest. That's what I'm trying to say.
No, they are not interest bearing.
Yeah.
It's just something that we do on as a favor to the customer.
To hold on to the funds and manage
We hold
them.
on to those funds in a non-interest bearing account, and then we make the disbursements on behalf of the customer. We are regulated on those funds and how we manage them. That's why we have to do an escrow analysis each year annually for every customer that has that, so that we can make sure that we are collecting the right amount of funds to be able to pay out for those expenses, and also to make sure that we're not holding more than what we're allowed to hold by law.
That makes sense.
We can only hold up to 2 months cushion, and banks get to decide if that's what they want to do. They can have no cushion, they can have 1 month, or they can have 2 months, but no more than 2 months. So at the end of the analysis, if there's more than the 2 months cushion, and I believe it's an extra $50, any amount over that, we have to give that back to the customer.
Okay. So not everybody needs it. It's optional for most people. What type of expenses? We already mentioned taxes, insurances. Any other expenses are covered by the escrow account or paid through the escrow account?
Mostly taxes and insurance. Mobile home taxes can also be escrowed. Flood insurance. Usually those are the
Four main
ones.
things?
Yes.
Okay.
So I remember when I had first started my construction process, and even to the point of getting my mortgage, like, getting it into a mortgage. It's really hard
Rolling
to talk,
everything into
rolling
permanent.
everything in one. It's really hard to talk about, I think, that side of things when you're not in it. So bear with me. But I remember asking, because it was already enough to build a home, and I was like really stressed about money. But then Polly's like, yeah, you have to pay insurance. And then I was like, oh, what? And then she's like, oh yeah, you have to pay taxes too. I'm like, oh, what? Maybe I should just rent. But I would ask her, I'd be like, well, what's my insurance and what's my taxes going to be? And she's like, I don't know. And I was like really frustrated with her because she didn't know, but you guys don't know because you have to do an analysis and an estimate until, you know what I'm saying? And so it leads me into this question. How is the initial amount for escrow determined when a customer first gets a mortgage? Because you don't know, right, what their tax bill is going to be.
Right.
And you do know insurance, I guess. So
yes, you do know your insurance because, as you know, we require you to bring in your
proof of
policy
insurance,
and the premium of how much your insurance is going to be, and that shows up on your closing disclosure. So we do have that amount, but the taxes, in your case, the previous tax bill is going to be on raw land. So the
cheaper, Crystal.
Yes, yeah. The tax bill is going to be very low. It could be that you're not assessed for a couple of years, so you may enjoy that for a couple of years until they come out and assess it, and then you get shocked and realize, oh my goodness, how am I going to pay this now? So we can set up your escrow account if you get something from the county. If you go to the treasurer's office or the assessor's office and they give you an amount and what they anticipate that maybe your taxes will be, we can set up your escrow account using that amount. Or the other option is you're always welcome to put additional funds into your escrow account, knowing that your taxes are going to be increased at some point, that, whenever they come out to assess.
Right.
So you're able to do that. So going back to your question, though, if you were purchasing a home and we already knew what the tax bill was going to be, we would use that previous year's tax bill and the insurance, take that amount, add those amounts, divide it by 12. That's going to be your escrow payment. To get it started, though, you have to have a beginning balance in your escrow account so that when you're making your monthly payments, we're going to have enough money in that account to be able to make the disbursements and hopefully not make your account
overdraft or
short at the end.
So I think I'm confused. Do you guys disperse? I think you may have said this earlier. You disperse the funds monthly, or no?
We just disperse them annually when they come due
And pay the taxes that way. Okay.
We collect when you make your payment.
Okay.
We collect monthly payments
Right.
into your escrow account. So that's the monthly portion of it. So to calculate how much you need for that beginning balance, we're going to take into consideration when your taxes are due, what months they're paid, what month your insurance is paid, and then we're going to take into consideration how many payments you're going to make before we make those disbursements.
Sure.
And there is a formula that the system goes through, and then it says, okay, I'm going to need your starting balance to be $1,000. You need $1,000 in your account, and that is also going to include the 2-month cushion. And then you're going to make so many monthly payments, and then we're going to disperse your first installment of taxes. And then you're going to make another payment or two, and then we're going to disperse the second. Then we're going to make more payments, and then we'll disperse your insurance. And that's how we come up with the beginning balance.
That makes sense. So if you're paying your taxes in June, you're going to want enough money for that first payment,
Right.
which is why you would divide it and have that cushion in there.
Yes.
Okay.
Yes.
Gotcha. So it is kind of, I guess, yeah, there's just different scenarios. Like, obviously, mine was different. Like you said, it would be on raw land. Thank you, God. Please, no one assess me. But then if you are just buying a house outright, like, yeah, you're going to see the past bill. Do you guys inflate that bill at all? Like an estimate to, because you know what, Crystal, everything's going up every year. It's not going down, they say. Yeah. So, if a tax bill is $5,000 and then a insurance was $2,000 from the previous owner, it's $7,000. Are you going to inflate it to $7,500?
No. We're not allowed to do that.
So you're not allowed to inflate.
We're not allowed to do that. We have to have something to prove why we're collecting that money from you, because we're not giving you interest on it. We're just holding it, and then we're holding it for you and not giving you any benefits from it.
Okay.
You're not able to earn any money off of it.
That makes more sense in my brain with this conversation.
Yes.
Yeah.
If you set up a savings account and were able to deposit those funds, if you were disciplined enough to deposit those funds into a savings account, you get the benefit of earning a little bit of interest. Mm-hmm. So we have to use something in writing showing why we're collecting that amount. Yeah. The good thing, like I mentioned, you're always able to come in and deposit more into that escrow account to try to cover any shortages
that you
Right.
Yeah.
Okay.
Well, that sounds like it's a lot of managing on the bank's behalf to keep all of these dates in mind and every tax bill and insurance payment. I mean, from when you start the loan, I guess, from when it starts is when the insurance would be due, I'm assuming, or close around. But how does the bank go about managing all of these different loans and escrow accounts? I mean, it sounds like a lot of work.
It is.
Yeah. We have a lot of workers.
Yeah. Thank goodness we're able, to pull different reports on different disbursement dates. Insurance, we usually pull the report twice a month to find out when the upcoming disbursements is for certain insurances. So we look at that. Gives us a report. We look for the bill, then make sure that we have that premium, the notice coming in. Then we may have to contact the insurance company so that we can get that. And then we like to disperse a couple of weeks early, because we all know with mail and all that kind of stuff, you never know when it's going to get there. And we have made our disbursements early enough and still the customer calls and says, I received cancellation notice, and at least we can prove that we've mailed it out early enough. So
Right.
that's a challenge when you're mailing it like that. Our taxes, we have a tax service that we use. When you have a home loan, we have a tax service that keeps track of anyone that has delinquent taxes so that we can know that, try to get those taxes paid if the customer is not escrowing, and that way we don't have, hopefully we don't lose the property.
Right, to taxes.
Yes, if they're not paid, then that can be very bad for the bank because we are counting on you paying your taxes and keeping that property up.
Right, which is motivation to have people escrow.
Yes.
Yeah.
So then when it's time to disperse for real estate taxes, this tax service will send us a report of all of our customers that have escrow. They actually send a report also to the treasurer's office and get all of the amounts for us. Then they send that to us. We go through and make sure that that's all the customers that we have, and then we send them a check, and then they actually send the check to the treasurer's office to pay the taxes. So it's all done in a lump sum. It is a lot of file maintenance and a lot of making sure that everything balances. Williamson County and Saline County are our two biggest counties for taxes. So when those two tax bills comes in, it takes about a week to get through everything.
I imagine that's a lot. So the bank pays it in one big lump sum for all of its customers. It sounds like okay.
Yes, for
that
each
makes
county.
more sense because I'm thinking if you're writing a check for every single property, oh my gosh, how confusing!
And like if they all got lost in the mail,
or just
be a disaster.
Oh, I know
that would be yes.
Yeah,
but we have branched out and we have so many different counties and states that we have mortgages. We hold mortgages in now that we're paying taxes almost every month of the year now.
Wow.
So some of them obviously may just be 2 or 3, but
it's still something you have to wait for and watch for.
Yes.
Yeah.
So what are some common changes that might arise during an escrow analysis?
Yeah, and what is an escrow analysis? Because we've mentioned it several times.
Yeah, I kind of don't really get what it is.
Don't really know what it is.
Escrow analysis is, first of all, we do it 2 different times. The main escrow analysis is for Freddie loans or those with fixed rates.
Okay.
Those are all done around the end of the month, or the end of the year, usually in December. We like to try to keep it at the same time because when you do the escrow analysis at different times, that can also affect your beginning balance and your new escrow payment. So we try to do those in December. The other loan are ARM loans, adjustable rate mortgages, and those are done on the anniversary date of your loan.
Okay.
So those can be done several times a month, depending on when your loan closed.
Okay.
And what it does is it looks over the past year of what we paid out, and it says, oh, hey, your taxes went up and your insurance went up, so now I need to start collecting more money to be able to make those disbursements for you.
That's when that change happens after the escrow analysis, when you can increase, I guess, escrow.
Yes. Otherwise, your escrow payment is good for 1 year. After that, it's going to change.
So it's going to be consistent every month for 1 year.
Yes.
And then after the analysis, it could go up. Has it ever gone down, I guess?
That
never happens.
There have been certain times. That certainly is not the norm.
Yeah.
It's always that they increase. Another part that you take into consideration for the increase is each time we do an analysis, we also have to do a new beginning balance to have in your escrow account so that we can make those payments out for you. And a lot of times, I think that's where customers don't understand. It's just like we're starting all over. If you were coming in to get a new loan and we tell you you need this much in your escrow account for us to be able to make your disbursements every year when we do the analysis, we have to create a new beginning balance. So it's going to look at if you need $3,000 in your account for the beginning balance, but we look at your escrow account and say, oh, you only have $2,000 in there. Well, there is going to be a shortage, and you have $1,000 that you need to come up with to make the $3,000. There's two ways we can handle that. We can take that $1,000 and divide it over 12 months and add that to your escrow payment, or the customer is welcome to come in and make a lump sum deposit, and then they don't have that added to their escrow.
To the payments.
Escrow payment. We don't require that. The bank does not require that you come in and make up your shortage. It's just an option for the customer if they don't want their payment to go up.
Yeah. Sometimes it's easier when you have money around that time, the first of the year or whatever. It might be easier to make lump payments.
Yes.
Yeah.
This account, this escrow account that you guys put the money into, is that something that I can see like on my online banking, but you've got it locked and you have the key? Or, 'cause you know what I'm saying? Like someone could totally...
I'm not sure if you can see it on your online banking.
Because I can see where some people like
that, but you can come into the bank and we can print a statement for you that shows all of the deposits that you've made into your escrow account, all the disbursements that we've made for you. That is certainly available, and you can see that at any time.
Yeah. I mean, I wouldn't assume it would be on your online banking. Maybe it should be. I don't know. I mean, do you know?
I would prefer not to have it if
Well, that's
I
what
had
I'm
one,
saying.
because I wouldn't want
I
to think that there's money there when it's already spoken
That's
for.
what I mean. If I saw money going to this account, I'd be like, yeah, I've got $3,000. I can go on vacation, but no.
You wouldn't have access to it.
Right.
That's what I'm saying, Crystal. It's under lock and key.
Yes, it is. Yeah. You do not have access to it. It is there.
But
there's
it is
no debit card
transparency.
attached.
Your bank will show you all the payments and deposits and all that stuff. So where your money is going, there's a trail. Yeah.
Yes, there is. And that's another part of the escrow analysis. That is included in your analysis. It's going to show you all the payments that you made for the past year, all the disbursements that were made, and what your escrow account balance should be. So you should be able to take that and then come into the bank and say, this tells me that I have $2,000 in my escrow account. Do you agree with that? And then we can help you to see that, yes, it is. If it's different, then we'll have to discuss that and tell you, here's why they're projecting this, but it's only showing this amount right now. Maybe you needed to make another payment or two to get it up to that, because sometimes it projects out, the analysis will project out another month or two of payments that you're going to put in. And so essentially when you get that statement, it may not exactly match what we have, but we should be able to show you that it's going to match.
Right. Okay. So that kind of brings me to my next question. So this analysis happens. How are we notifying customers about this analysis, and how are they, informed about the results of it?
They will receive a statement in the mail, and a lot of times, unfortunately, customers don't open it. Mm-hmm. A lot of times we do that. We go through our mail and think, oh yeah, it's probably just a statement. It's just, and then sometimes their payment goes up and they'll make their payment, their old payment, and then get a notice in the mail that says you're past due, and they want to know, why am I past due? Mm-hmm. And we'll say, well, we mailed out, you've received an escrow analysis, your escrow portion went up, and well, let's say I didn't receive that. And maybe they didn't.
Yeah.
That happens as well. Sometimes we all know, we've discussed earlier, that the mail, we don't always receive our mail. But a lot of times I don't think that I've been guilty of that too, not opening things and then go, oh my gosh, yeah, I got that, but I didn't check into it.
Yes. Yeah.
So we try to get the statement. I think it's required that they have the statement in hand 45 days before their first payment is due.
Okay.
So when we mail them out in December, their first payment will be due in February. So they have enough time. They'll be making January payment at their old payment, and then they know that there will be an increase in their February payment.
Got it. That makes sense.
So with that escrow analysis, what are some things that homeowners should pay attention to when they receive that?
They need to...
Obviously, that maybe it went up or down, but...
Yes, that's the first thing that everybody looks at.
One that people notice.
You're going to want to look at... Well, it's kind of... The escrow statement is easier to read backwards to the front. The last page is going to show the amounts that were dispersed for the previous year and the amounts that we used to calculate your escrow payment for the last year that you paid. In this instance, for your escrow payment for 24. The last page will show the amounts that we used to calculate that payment for 24. And then the third page shows a list of all the disbursements, all the deposits and all the disbursements that were actually made on your account. So you can compare page 3 and page 5 to see if taxes went up or if insurance went up or down, either way, and you know exactly what was dispersed. And then the first page is going to show your new escrow payment and the new beginning balance, and it's going to show each month. Once you make this deposit, once you make your payment, that deposit's made, you'll have X amount of dollars in your account, and then the dates that will make the disbursements for the taxes and insurance. So you want to look at that. You want to look at when your first payment is going to be due with the new payment amount, and you also want to look for the shortage, or once in a great while, an overage. And if there's an overage, you will be receiving a check as well from the bank, because like I've discussed earlier, we can only keep so much in your escrow account.
That's so good. So I'm not used to reading back to front, but that makes sense because you would want to see why.
Yes.
The reasons why it is doing what it is going to do the next year.
Yes.
Yeah.
And I'm sure they put all that information on the first page because most people, that's the first thing they look at. They're not going to go to the back. If you put the new information towards the back, they're not going to go there and look. Yeah. That first page gets their attention. And
I swear reading banks stuff is like overwhelming.
It is. And
it's like a foreign language if you're not.
It can be overwhelming for us sometimes too, trying to figure out when customers call in and want an explanation.
Yeah.
So I guess my next question, we've kind of already discussed this. We talked about what happens after the analysis, the payments of the customer, if it goes up or down, what happens if there's a surplus, the bank will give you a check. And if there's a shortage, we'll require them to either pay a lump sum or put it out throughout the whole year. What happens? Do they get that, or what options are available to customers to handle those escrow shortages? Anything else besides the lump sum and the monthly payments, or is that kind of?
Those are usually the only options.
Okay.
Yes. Like I said, if there is a big increase and the customer is having some issues, please just call your loan officer and come in and talk with your loan officer, and we'll be happy to try to work with you and help you out on that.
Yeah, for sure. What are the most common questions customers have about these accounts, these escrow accounts? Are there anything that we haven't mentioned today that customers are really concerned about?
No, I believe that's we've pretty much covered it. I know the biggest thing is they don't understand their shortage. I think that's the biggest thing. They, because you don't understand that we have to require a new beginning balance each time, because they could look at the statement and say, my account has never went in the negative. I don't understand why you're telling me that there's a shortage, but the shortage occurs most of the time in that new beginning balance.
I see.
It's what we require you to have in your account, and that's where the shortage comes from.
Or have you, I'm sure you have, and other people probably have at the bank, we're just, the middleman. We're just collecting them to then give to the tax man, Do you find that people are agitated with you guys as the banker when you call and maybe say you do have a shortage, or let them know that their payment will be going up?
Oh, yes.
Oh, yes. She's like, I could do a whole nother podcast on that.
Yes.
And it's like, how do you manage that, I guess? I think it's just education from a banker's standpoint of we are the middleman.
Yes.
And I'm trying to help you.
Yeah. Yes. And that's true. Escrow is difficult to understand. It really is difficult. And there are many layers to it. But you just try to talk to them and explain and go over everything with them and try to get them to understand. It's much easier if you're disciplined. It's much easier for you to come in, make your mortgage payment, if you want to have your own savings account just for the purpose of putting in the money for your taxes. It's much easier to do that yourself if you're disciplined. Sometimes, though, like you mentioned earlier, you might look at that account and go, ooh, I've got $3,000 in there, and oh, my refrigerator went out, and I need to go buy a new refrigerator. I'm going to use that money, and then I'll replace it. Maybe you don't replace that money, taxes come due, and you're like, oh my gosh, where am I going to come up with all that money now? So if you don't have the discipline to be able to put the funds aside, escrow is a great thing. And some people just don't want to mess with it.
Some people are just fine paying it.
Right.
When
and
it comes
they're
due.
okay. They just need to understand that it will never stay the same.
Yes.
We do get calls that'll say, people will ask, what can I deposit into my account to make my escrow payment go back down to what it was this past year? I said, we can't make it go back unless your taxes and insurance have stayed the same, which is usually never going to happen.
No.
Unless it stays the same, it will never go back to that amount.
Because we're required to only keep a certain amount in that.
Yes.
Yeah.
So,
Yeah.
so
Well, Crystal, I feel like you said there's a lot of layers to it, and I'm sure there are, but you've made it really crystal clear today.
Yeah.
well, I hope I've helped a little bit.
Yeah. It has been super helpful. I maybe have one last question. So if someone pays off their mortgage, like they're done, what happens to that money? You know what I mean? Like what happens if there's, I'm selling my house, I pay off my mortgage, but I'm still required to pay taxes for that year. What happens to that money in that escrow account?
Okay, that's a good question. If you're selling your home, the title company's going to request a payoff statement from the bank. When we send that payoff statement to the title company, when we go to pull the payoff statement on the computer, it is going to decrease your payoff by any funds that are left in your escrow account. So you do not have to come up with that amount. If your payoff was $50,000 and you have $2,000 in your account, your payoff would be $48,000. We have a lot of customers say, I want to take that money though. I want you to give me a check for
the $2,000
escrow funds. We can do that. But your payoff is going to be $50,000 and we're going to increase your payoff by that $2,000 and then hand you a check. But people need to understand that, and if they don't understand where that money went, they think that they just lost it and they paid it in. But by the same token, when your payoff statement goes out, if taxes and insurance have went up a lot and your escrow account would happen to be in the negative, we're going to add that to the payoff amount and collect our money that way.
So it goes to you either way. I mean, it's accounted for. It doesn't just go straight to the bank. It's going to work.
Yes.
Yeah.
Yes. And we can show that to the customer. We can show them a copy of their payoff statement and all of that,
Yeah.
And so when a person pulls or pays off their mortgage, taxes and insurance don't stop.
That's true.
So you got to do self-escrow, I'm assuming.
Yes. Mm-hmm. Yes.
Set up some auto
If we
payments.
don't have your mortgage, we're not going
doing
to
that work for you. Right. Good deal.
Yeah. Well, thank you so much, Crystal, for explaining this.
Thank you for having me.
Yeah, it's been great.
It's been really good.
I learned a lot.
Yeah, I did too. Thank you all for listening, and we will see you next week. So, Jill, where do we go from here?
Be sure to check out our show notes for this episode, and also be sure to follow us on social media and subscribe to our newsletter. We'll see you next week.
See you next week.